G'day all, welcome back. Episode 52, Money in the Tank. Welcome back, Tankers. Great to have you with us again today. Apologies for missing last week, but I was just so tired out from our half century that we did the week prior. But Brad and Arnie held it down very well. Without further ado, my name is Joel Seach, Principal Advisor, Harpel FG.
And I'm Arnie, finance professional, and you can get us at Money in the Tank on YouTube, Instagram, Twitter, and Facebook. And leave a like, comment, subscription because that helps. And click the little bell.
Love it, and we love hearing from you guys. So hit us up and keep those Q&As coming in. We enjoy answering them and learning about what you guys want to hear about more and more. So today, in terms of the episode 52, it's going to be a bit of a quick fire, rapid fire session today. So 20 or 25 minutes. I know we say that sometimes and we lie about it and ends up going for 45 minutes, but I think we enjoy the conversation and we dig in. So listening to the episode from last week with you and Brad, I think you mentioned at the start it was going to be a quick one. Ended up going for about 55 minutes with Brad tacking on at the end, which I really enjoyed. And then, he even time-stamped it as well. And said, I think we've run for maybe 40 minutes today. And I checked when he said that, it was like 47. So
That's classic. We always aim to keep it short, but there's a lot to get through, isn't there?
Yeah, absolutely. So, but today, there's no specific topic today. So it'll be some pretty cool general items, I think, because there's been a heap going on in the world and in the markets abroad. So look forward to touching on those things today. But without further ado, we will rip into the grail today of Rivs. Here he is here. The blur doesn't work so well, but anyway, trust me in this. I've got the Holy Grail here. Rightio. So we are at tick that page off here. So hang on a second. Let me just kick on to the next page where I haven't ticked off. I've ticked a few off in Renee's favourite Rivkinisms. So I'm actually running short. Here we go. My worry bead habit started in 73. I took them up to give up cigarettes, and they worked until I got a brain tumor in 87 when I thought I was going to die. But obviously, brain tumor didn't get him in the end. But a worry bead habit. There you go. That's Rivkinisms. There's no actual quote there today. It's just him telling us about that, which maybe is
he's a little bit superstitious. It's like old Rivkin with the worry beads. Okay.
Yeah, the worry beads. Yeah, you don't usually see many people with worry beads nowadays, do you?
No, it's not a common thing. I wonder if it was back then or if he was a unique individual.
Yeah, I think he's quite unique. Yeah, possibly see him roll around the exchange with his beads in his hands.
Mate, I had a look to see if I could buy Rivkins Rules online, and the only place you could get it is like secondhand on eBay, and it's expensive. So,
maybe I'm sitting on like an artifact here. I'm sitting on something vintage.
That's a bit of Oz stock market. Paraphernalia. What's one of that's our favorite show called again? Antiques Roadshow, mate. You'll get on Antiques Roadshow, and they'll value the Rivkins Rules and. Well,
see, what's all these ticks and marks in here? So I'll just his quotes for our podcast and mark them off as we go. Eventually we'll run out. In terms of today, so before we throw to Arnie with the news items and agendas, I guess just as an overview in terms of the market the past few weeks, it's had quite a good run in terms of the exchanges. And I guess we'll talk generally about the US and Australia, because US sort of tends to catch a cold, sneezes, and everyone else catches a cold, but Australia in particular. So we sort of tend to come off there, and we've seen them have a decent run. There's been some information come out of late, and Arnie may touch on some of the stuff in his news items, but just with the inflation data, maybe looking a little bit more promising or optimistic from their end. In terms of the interest rates not maybe getting as high as they first thought, or inflation potentially starting to level out, which then factors in, I guess, to the market as a whole to say, okay, well, the market then takes a view to say, was the market trending or directing in a way where they thought there was more hawkishness to come and more severe hikes to come? And then it's sort of reacted quite quickly to say, okay, well, maybe have we overshot the runway here in catering, or thinking the market's going to be worse than it potentially could get to, which is then we've seen a bit of a small rebound the last few weeks. So it's been quite an interesting time, and then that sort of led the Australian market to follow with some quite rapid market movements, especially last week in terms of the uptick, which was probably well overdue. I think it had a run down, but there'll be more to play out. Obviously, it's a week-by-week proposition at the moment in terms of where inflation data is coming up and core inflation as well. So that was sort of an interesting tidbit. Another one that I came across the other day as well, just on a market update in general that we had with one of the fund managers, was some of the shipping stuff. So some of the tightening that we've seen around, the supply chain side of things, and that's stemming into the recovery that we're, hopefully going to see in terms of the supply chain and the tightness we've had in that area. We've seen, and I think we've shared on the podcast before, we've seen that the cargo ships at ports around the world and Shanghai all clogged up and congested. And one of the things the fund manager mentioned is that's all opened up a lot more now. So it's been the shipping container costs, if you remember, Arnie, you may remember this, during the peak, was they got up to about $16,000 a container from, as an example, Shanghai to LA. They're now back down around $3,000, and they're moving a lot more quickly. So that's a huge lightening of the load in terms of the impost on the cost of goods being transported, which will then, I guess, flow through to the tail end consumer and inflation, you'd hope. But that's where they talk about inflation being sticky, and do prices actually, come down once they've gone up, or do they stay up? And that's your new sort of set bar. So that was an interesting one that I came across, that the shipping containers have come off a touch, and for that particular route, and the ports have opened up a lot as well. And then we might even touch on the news items with the COVID restrictions in China sort of tending to, come into the market. The market updates every day. You sort of see a bit more and more about, is China going to release or adjust? And they've changed some timeframes for quarantining for people coming in. So that's an interesting tidbit as well.
Yeah. Some of the stuff you've mentioned, I do have here to touch on in the rapid fire news, or this is the news episode, but because we've got a lot to get through. Shipping containers definitely have seen it come off. And as you just mentioned, I think I saw a news item during the week, which I haven't got written down here, about China easing their zero COVID policy. So maybe not going as hard as they have been, and just trying to help that situation along a bit. So yeah, positive impacts. One interesting thing that a mate of mine sent me, so shout out to Austin, was that at the close in the bond market overnight, the 1 month treasury bill and the 10-year inverted, meaning that it's sort of, and this is, general in nature, nothing is certain here, but could be signaling, a US recession before Christmas. So, Merry Christmas. And they've got one more Federal Open Market Committee meeting to happen in December. And yeah, got some news items about that, which we'll touch on later. But I got a couple of big ticket items, Jolie.
Yep.
And then I'll sort of go into the shorter ones, and I'll say the item, I'll read a little bit about it, and then you can give me your take, and if I've got anything else to say. So these three actually come from a newsletter I get, which is called The Daily Upside, and that's pretty interesting. So Coalition of Nations have agreed to help Indonesia get rid of coal. So as you know, the G20 is being held in Bali. I think it might, if it's not still going, it has been going on for the last week or so. And a coalition of sovereign nations and private companies, which will be led by the US and Japan, have agreed to fund a $20 billion pot to help Indonesia phase out its reliance on coal. Now, Indonesia per capita produce like way less emissions than the US, but it's like the third largest producer of coal in the world. So that's just an interesting tidbit there. You got any thoughts on that one?
No, it's an interesting one, and I guess is it sort of big brother coming to little brother and saying, hey, you try to do this and make this better for the world, but are you really leading by example in I guess helping Indonesia, or how are you helping them reduce that, and where are they going to be able to help supplement if they are to reduce their coal production, where they're going to be able to help supplement that or redirect that into maybe more sustainable energy. So that's sort of something, I guess, that I'll be interested to see as to how that would look, because obviously Indonesia being, they're not the wealthiest country, group of islands country in the world. So, and they've obviously been hit really hard, most likely through COVID with tourism and whatnot. So yeah, if they are going to reduce coal outputs, then how's it going to affect their GDP?
Yeah, it's interesting. I'm not sure of the answer, but I think you hit the nail on the head. Those are the questions. Hopefully they can replace those jobs with renewable energy jobs or something else. So yep. We've also got Walmart has I saw this is not one this is anecdotal. I saw that Walmart may be trying to take on Costco in America with their $1.50 hot dog and soda combo.
Love that.
They might be trying to introduce their own their own version, the Walmart dog or something like that. But they're also in the news because they've said that they're expecting a successful holiday season in America with Thanksgiving and Christmas and whatnot. But apparently they're doing so by squeezing their suppliers because they've got all the buying power because Walmart is the largest big box store in America. So yeah, they're sort of putting the squeeze on people who are trying to supply them. But in this rising sort of cost environment, what is that going to do to their suppliers, and how are they going to tackle them? And in related news, Target had its largest one-day drop of about 15% when they sort of gave forward guidance that they were expecting a really poor holiday season. So
okay. And did you say Walmart's going to try to pass on some of those savings? Did you say to consumers, well, by screwing down the suppliers, or?
That is their business model. Yeah, they've like historically always sort of said that they try and get the lowest cost possible so that they can always pass on the savings to consumers. So the consumer wins, but the supplier may not be winning. And what does that do for those businesses?
Yeah, and you can only do that with scale. So obviously they've got scale. So they've got the buying power. $1.50 hot dog and soda combo. So obviously they're they realise it's a bit of a loss leader. They're going to take a hit on it, but they're going to maybe match and compete a bit with Costco. So there you go.
Yep. And then YouTube Shorts, they're talking about implementing shopping while you scroll. So have you used YouTube Shorts? Do you know what I'm talking about?
Fill me in.
So it's sort of similar to like Facebook or Instagram's Reels, or I assume TikTok. I haven't used TikTok. Where
I've seen them.
It's a short form video, and you can just sort of scroll as one finishes, another starts. So apparently there's something that happens in China already on some of their social media, where like you're watching a scroll, like a short form video, and it might be for a product, and with a click of a button, if you've got your credit card linked, you can buy that product straight away. So at the moment, I don't think any of the Western sort of social medias are doing that, but YouTube is looking at bringing that in, where they're going to have I don't know if it's going to be separate to the other videos, or you have a shopping channel, you have a shorts channel, but or maybe they'll just be mixed in. But yeah, they're going to do that. So what do you reckon? You'll be able to buy a product you see with the click of a button.
Going to be interesting, and yeah, YouTube's a fascinating one. They're popping up all the time at the moment with like the paid subscribing thing. They're obviously really pushing for that because they've got YouTube TV and they've got the ability to be able to watch premium without ads, and I could see it being a big competitor to maybe, I don't know, would you say it's a direct competitor to Spotify if people just want to listen to music and whatnot, and say, well, I can get YouTube, I can get YouTube video, I can get music that I want to listen to, and I just pay it all in the one, whatever their fee is. I haven't actually subscribed at the moment, but I'm thinking of giving it a try.
Yeah, I haven't subscribed, and like they always offer me that free trial. They're definitely a competitor to Spotify. Interestingly, they reckon that this instant shopping market is expected to be a $2 trillion market by 2025. That's according to consulting firm McKinsey. So thinking about what players there are in that market, it is YouTube, which is owned by Google. There would be Instagram and Facebook, obviously owned by Meta. And then there would be TikTok. Is there any others that I'm thinking of, like short form video?
No, because I was sort of thinking, well, what market are they going to take away from? And that'd be, Amazon or eBay, but they're not linked up with socials as such. So it's probably a smart move because people are scrolling for enjoyment on the socials and YouTube or whatever it may be. They're not necessarily scrolling on Amazon as much, you'd say. Like, that's just my guess. And to say, okay, well, if you're scrolling on YouTube and you're just sort of looking around, playing around, and you see these things pop up in terms of things that you're going to purchase, do you end up purchasing them through YouTube and taking away from what you may have purchased on Amazon? So
it's absolutely going to eat Amazon's lunch and those retailers we were just talking about before. So like Walmart's, Costco's, Target's, Kmart, whatever. So interesting. And I also like a little bit off tangent here, but Meta, with their focus on augmented reality, would be interesting to see if you had like an Oculus or a Quest or whatever they're called now, Quest Pro, and you were, had the goggles on and you were going through these videos and it was augmenting, like I'm picturing like clothing on your body so you could see how it looks
on
you and then click purchase. I know they've got things like that in some shopping centers now, where you can see an augmented reality mirror, which does that. Would be interesting to see how that would work. But yeah,
wonder if that'd help with finding out if pants are going to be too short for me or not. For the listeners out there that don't know, tallish, 6'6", 6'7", thereabouts, depending on the day. That's a shout out to my mate Faf. My height fluctuates, but yeah, pants is always a drama for me. And my favourite suits place, I just found out it's gone out of business. Jack London, they used to do suits on the large end of the scale that would fit me really well. So that's just a side note there for the listeners. Can augmented reality tell me if the pants are going to be too short for me or be the right fit?
If it can't, it could probably link you straight to a tailor, a tailoring service. Just to let them out.
Sorry, your size and height does not fit our criteria. Here's a tailor. Here's recommended tailors you can go to.
All right. This is more rapid fire stuff now, Jelly. So Republicans have gained control of the US House. So that's breaking news.
Yeah, I did see that. Yeah. And was it the Democrats held on to the lower house?
The Democrats have held on to the Senate, and Republicans have got the House. Yeah.
Okay. Yeah, there you go.
So that's interesting.
Does it change much in terms of the political landscape? On the US politics side of things, I'm not, completely all over how it works in terms of, I know the broad stroke, but in terms of, has that changed with the Democrats holding both?
They were, and I believe it's just a bit more of a balance of power now. So you need a few more bipartisan things to sort of help get bills and stuff through. I think Brad's probably better to ask about this. We should ask him, but I think a lot of power resides with the individual states themselves and the governors in America. So even though obviously the federal politics is important, those governors wield a lot of power. So anyway, interesting one.
And I see the other day that Trump's officially put his hand up to run in 2024.
Yes, I did see this. So he's filed the paperwork, which will be super interesting. I wonder what's going to happen there. And I also wonder if he were to be successful, would he be allowed back on Twitter? Or maybe he'll be allowed back on anyway. We'll see what happens.
What's his relationship like with Elon?
I think it was pretty good last time around. I'm not really sure. I think I think it was okay.
Okay.
Yeah. Okay. I got a bit of a batch here of crypto ones. So FTX Bankman-Fried is being sued in a consumer class action. Tom Brady and the Golden State Warriors have been named in the suit. Any thoughts?
Oh, you can see that. Yeah, you can see that happening. It's I don't think it'll be the first, and I don't think it'll be the last of this sort of thing to undo. So yeah, you can see that consumer class action coming when there's been maybe some mischievous acts that have occurred.
Yeah, and relatedly, the House Financial Services Committee is going to hold a hearing in December on the collapse of FTX and the broader consequences for the digital asset ecosystem. So maybe some regulation coming there.
Yeah, and that's, how do you regulate a market that, doesn't necessarily want to have regulation attached to it?
That's exactly right. Genesis Global Capital has paused their withdrawals. We will not be able, this is a quote, we will not be able to meet customer redemptions within service level agreement of 5 business days. Genesis says FTX has created unprecedented market turmoil, resulting in abnormal withdrawal requests, which have exceeded our current liquidity.
Yeah. And that tends to happen when you look back at cycles of markets back in 08, 09 in Australia, as an example. There was funds called mortgage income fund or income funds that were there to produce income, but the actual assets behind them weren't super liquid. So when the banks, the government came in and did a bank guarantee on $250,000 per institution of guaranteed funds, people that were investing in these income funds, because they were relatively low volatility and relatively safe, they sort of started to say, okay, we'll redeem from here and we'll pop it into the bank and get our 5% or whatever, because it's maybe a bit more safe when all the banks around the world were having issues. And that's the whole cause and effect type thing in terms of the actual banks here were never in any doubt, because we've sort of got some of the strongest big four banks in the world because of that, I guess, that almost oligopoly they've got running here. So then what happened is there was a run on the income funds, and the income funds had to say, well, they're not actually as liquid as we'd like. So we need to put a freeze on full redemptions and do partials to actually protect the people's funds and protect the actual asset from collapsing. So obviously, what you're sort of talking about there is they're trying to protect potentially maybe themselves and maybe the asset itself to help it from collapsing completely.
Trying to stop a bank run, trying to stop the contagion which we are now seeing in crypto markets. And I remember early on in the pod we had a question about that, and specifically in relation to Tether, whether or not there was contagion risk in the crypto markets and how bad could it be. And interestingly, today, off the back of that that Genesis news, Tether has confirmed that they have zero exposure to Genesis. So Tether's still avoiding this contagion. So it'll be interesting to see what happens there.
And I can't remember the last episode of Joel Brad touched on it. Was there many companies that were actually holding that crypto FTX that has sort of collapsed?
Brad did touch on companies that had a stake in FTX or Alameda, the hedge fund. Whether or not they were holding the token, I assume I can't remember exactly if he said that or not, or detailed who held how much, but I assume some exchanges would be having to hold some of their token if people wanted to buy it. So I think that's why.
I think it just led me down that thought pattern to say, well, how much has crypto in general come off the past 12 months? And these companies this time last year, that were holding, decent amounts on the balance sheet and also accepting it as payments. Like crypto, just take it as an example, 70,000 US, and then Tesla's accepting it as an example, and they're putting it on the balance sheets and buying it, and now it's worth, what was it lately, 16?
Yeah, well, I think it dipped below 16, and I'll give you a quick update on how much it's worth right now. Bitcoin currently sitting at 16,719 USD.
Yeah.
But yeah, interestingly, what kicked off this whole thing with FTX was CZ from Binance on Twitter saying, we are going to, over the course of the next month or so, I forget exactly what he said, we're going to dump out the rest of our FTT tokens because new information has come to light about FTX, and that's what started this whole thing, and that's what's brought all of this all of this misuse of funds to light by SBF. So anyway. So the Fed's bar has said that we are paying attention to liquidity issues in treasury markets. Didn't elaborate. Also said, so the Fed, Williams said, monetary policy not the best tool to address financial stability risks. Fed's Daily said the consumer is hanging in there. This is in the CNBC interview. And also said that contacts say customers are stepping back. Consumers are preparing for a slower economy. That's a good start. Still with Fed's Daily, we want to see the economy slow, and pausing rate hikes he's referencing is off the table. So they're now focusing on the level of rate hikes they think they will require. And this is just throwing back to what you said earlier in the pod, Jolly. So it looks like even though they have seen a slight, if you want to say, cooling in the inflation numbers, they are saying that they are committed to still hiking. A pause is not on the table at the moment. So we can see, like at this last meeting in December, probably going to see, as we've hypothesized, another 50 basis point hike. And then they'll have a look at it in the new year when they come back.
Yep, and more domestically in Australia, we'll probably, I think December will be the last meeting for the RBA here. So first Tuesday of the month, which will be coming up in a couple of weeks' time, and we will see how they go. But most likely, definitely, I'd say another rise. And I haven't actually seen the stats, but maybe a 25er.
Yeah, I reckon. I think Dr. Philip Lowe will probably give us another 0.25. And as I referenced earlier, Target down 15% after they warned of the grim holiday sales. Nvidia has beaten on third quarter revenues, 5.93 billion. Estimates were 5.79 billion. Their data center revenue in the third quarter was 3.83 billion. The estimate was 3.79 billion. And their third quarter gaming revenue was 1.57 billion. Estimates 1.32 billion. They said that they see their fourth quarter revenue at 6 billion plus or minus 2%, estimate 6.09 billion. However, Nvidia has taken a huge hit today because even though they beat on revenues, they missed on earnings per share. So down after hours when they've reported.
Cool. Thanks for the quick rapid fire update.
All right, I've got a few more, mate. A few more.
Okay.
Important one. Apple has said that they are going to be sourcing chips from Arizona. They haven't stated explicitly where, but they did say from a plant that's currently under construction, which basically limits it to two options, which will be TSMC, who are now building a chip fab plant in Arizona, or in theory, Intel has a plant there which they might be building out a bit further. So that's
and how those two stock prices gone since Apple announced that?
Oh, Apple was like a bit of a divergence in the market overnight, which was sort of down market. Apple was going against that trend. I don't know if it was green for the day. TSMC took a big bump last week because I don't know if you saw the news, but Warren Buffett took a big stake.
Yeah, I did see that.
Yeah, so good timing by the old Buffett, or did he know something? Probably not. I don't know.
Well, isn't it the Buffett effect, or the Berkshire effect? Is once they buy into a company and that comes to market, then everyone else sort of follows suit.
For sure, yeah, for sure. I think that happens with a lot of big super investors.
Yeah,
call them super investors, but I feel like there's people who will literally just wait for those 13Fs, which details the positions in the last quarter to drop, and then they'll just follow them into the ones they like.
Yeah, that's it. And big fund managers, like super funds or fund managers, whenever they're selling out of position, they have to do it slowly, so they actually don't, impact the stock too much because they hold so much of it.
That's all. And I think if they hold over a certain amount, I think it might be like over 5%. There's like that's when they have to list it in their 13F, perhaps something like that.
Could be right.
This is the last news item, Jolie. And so OPEC had been hypothesized that exports would fall by 1 million barrels a day in November. However, overnight, the Secretary General of OPEC, I'll try this name here, so forgive me, Haitham Al-Ghayas, said that the organization is ready to intervene to the benefit of oil markets, and left it at that. So, yeah, hopefully I think that sounds like good news in the short term for the consumer, because if we were to see barrels per day drop, it just means more pain at the pump. But if they're willing to intervene, what does that mean?
Yeah, already copying a bit of pain at the bowser, so that would be definitely helpful. Unless you're running an electronic or a hybrid vehicle, and you're laughing, especially if you've got solar panels.
Absolutely, mate. And that's the news.
Thanks, guys. So thanks, Arnie, for the rapid fire news, and thanks to listeners for tuning in. We don't go anywhere. We've got the 50-50 coming up, which is a special one today. A good one, I thought of, very Australian themed one. Where can listeners get us out, Arnie?
At Money in the Tank, YouTube, Instagram, Twitter, and Facebook.
All right, love it. So without further ado, into the 50-50 today. So in terms of the 50-50, Arnie, I got this from driving the other day, and I was just thinking to myself, the Australian way. So when you're driving past a mobile speed camera, do you flash the other drivers when they're on their way to the mobile speed camera, or do you not flash?
I absolutely flash, and now I do it no matter which way the car is facing, because they got this new technology now with a camera out the front and a camera out the back window, so they're getting you both ways. So
both ways.
Absolutely doing my
you're
fellow motorists. Yeah, because people have. I'll hit. What do you reckon? And I'll tell you what I think.
I'm a flasher, and I love flashing the high beams. I think it's an Australian tradition. It's the Australian way, and I think you're un-Australian maybe if you don't, but that could be divisive. Let us know what you think. And there's a bonus question to this one as well, Arns. If you receive a flash from a motorist coming past, do you go the hand wave?
Oh, absolutely. Wave. Anytime someone does something which is courteous to me on the road, a flash, or they let me through a tight, there's cars on the road, I'm giving the wave every time. And I hate when I don't get the wave back. Yeah,
it's hard to tell with the tinted windows, I was thinking now. Like, I've flashed a couple of people, and I'm like, you waved or not? Like, come on, give us a wave. But maybe the tinted windows, you can't tell. But I guess if I'm in doubt and it's a really big one that someone sort of lets me in, or they've, it's a big effort, I'll actually put the window down.
Oh, for sure. Hand out the window. Thanks, mate. But I was going to say, controversial about the, high beaming someone if you see a speed camera, because you wonder, if they're speeding, should they be speeding? But it's we always go a little bit over the limit. So I don't know.
I don't condone massive speeding and whatnot, but a sneaky touch over or touch over going down a hill. It's you're always going to go a little bit over. So anyway,
exactly. I like that, mate. Good one.
Yeah, good 50-50 this week. So let us know your thoughts, where you stand. But the flash. Great, guys.
I feel like we could cut that pretty funnily.
The flash. I'm sure Brad will be able to edit some flashes on there, some cars and some high beams. But thanks anyway for tuning in, Tankers. We always appreciate it. And let us know Q&As, what you want to hear about next week, or a good 50-50 to throw into the pod. We'd love bringing it to you, and enjoying kicking into the new half century. So without further ado, we'll leave you to it. You know where to get us at. Hit us up anywhere, and we look forward to speaking to you guys next week. Take care for now. Cheers, guys.